Morning guys, Mark Calvo here with Calvo Real Estate. So rates have gone up, and so I want to break down this to you guys in two different ways, two different mindsets. So what we're looking at is, if you're a buyer, what's this mean for you? And if you're a seller, what does this mean for you? So let's get right into it. So if you're a buyer, obviously the interest rate hike, so we're at like 4% right now for mortgage rates. What that means is obviously your mortgage payment now is going to be higher. So depending on the price of your home, the same house that you were maybe looking at last month is now going to be, or let's say 6 months ago, is going to be between $150 to $300 or $400 per month more. Okay, if all things stay the same. For example, $600,000, let's say a $21,000 down payment, such as that's a 3.5% down payment. You guys don't have to put 20% down. In case you weren't aware, I'm sure you were, but you can put as low as 3.5% down. That will make your payment anywhere probably about $250 more than what it was before. Okay, there's calculators on here, of course, and I don't want to spare you the math, but if you want me to do this, or if you want me to send you the calculators, give me a call or text or message, and I'll send it right over. So that just means that I think you're going to see smaller houses being sold, houses more fixer-uppers and things like that. So if you're still committed to buying a house, or you're actually also going to see a lot maybe less demand, because now that the rates are higher, that it's going to take some other people out of the market. But the thing is about taking people out of the market is that they still have to live somewhere. So if they're forced to move, then they're either going to need to rent or they're going to need to buy. Okay, so that kind of flips me back to the sellers. So if you're trying to sell, or you want to sell, you're gonna definitely not see the price appreciation that you saw last year. Okay, because last year rates were going down, and then all of a sudden, what happens when rates go down? It generally means that everyone's like, "Woo! I can buy a more expensive house now and have the same payment." So then, unfortunately, they go to that same house, and then another person goes to the same house, and they all bid it all up, and then eventually that $300 savings gets absorbed by the price of the house. So now we're at that absorption portion where it's already been absorbed. We've already increased. Last year, there's already been that huge huge appreciation growth in real estate. And so what's going to happen for 2022? Is it going to crash, or is it going to continue to go up, or what? Obviously, I don't know. So, but all I do know is kind of what's going on right now. What I would say is it's not going to crash that I can tell, unless rates go up to like 8% or something, because I've never seen that in my time in the industry. But of course, if they stay roughly in the fours, I don't think we're going to see any major shaking happening, because we have seen it in the fours. For example, 2016, I believe it was 15 or 16. Don't quote me. And the market didn't crash, right? So right now we're kind of in that middle phase where we're trying to figure out, okay, well, what's the market going to do? Is it going to go down? So if you're a seller and you think it's going to go down, then it's a good time to sell now, because we might be at the peak. But the problem is that there's still a huge supply shortage, or on the supply side, and then on the demand side, there's a lot more people who want to either buy or rent. So we're also seeing rents finally catch up to the price of real estate. So I think at this point, you're seeing the markets kind of pause a little bit, right? Stock market's going down because interest rates go up, and that happens. That's almost the mechanics of it, right? So if interest rates go up, it costs companies more money to borrow, okay? Because it's not just mortgage rates that go up, it's also other corporate rates and things like that. So it costs more money for companies to borrow, which means that their earnings go down, which means that investors sell those stocks or so on, and then maybe move to a different sector that is not being as affected with the rates, something like that, right? But basically, the Feds can't, or no, they can do whatever they want, but historically, since I've been in the industry, I haven't seen them raise rates like 2, 3, 4%. It just doesn't happen. So it's just going to be one of those things where they have to raise rates. They have to still give some. So because rates are, people invest in bonds and then they get an interest rate back. Right now, bonds are pretty much dead because rates have been at zero. So there's all these different mechanisms in place that I don't want to go too far into. But bottom line is, there's a fine balance right now that they're trying to play out, and the question is, how far are they going to go? So I don't know. So from a selling standpoint, it's really up to you. If you have to sell, if you've been wanting to sell, it's not a bad time to sell, because we are at a really high peak. And then all the projections are, we're going to see growth, but probably 2%, 5%, 10% growth in the real estate market as far as price appreciation is concerned. But again, that could be wrong too. A lot of people thought that the pandemic was going to crash real estate, and then it created this, insane growth, but that's because real estates came down and so on. So we do know that it's going to slow down the market. It's going to take some people out of the market from being able to buy houses. But again, there still is a huge supply shortage when it comes to real estate. And there are people who need to buy or rent. And so when it comes to that, there's still demand, which is hopefully not going to crash the market, but it's definitely going to slow down because there's people who now can't afford anymore, or they have to buy smaller houses. So I really think that the affordability issue is going to come down to smaller homes, condos, things like that, but it's going to take a little while to kind of all shake out and for builders to catch up to the need and so on. So that's my thoughts. Those are my opinions. Is it a good time to buy? Is it a good time to sell due to the rates? Obviously, if it's for the fact that the rates are a little higher, I'm sorry for you guys who are looking at buying. It's a little rough, but it could go higher. So you have to do your research. You have to try to figure out, can you afford a house right now? Do you have to buy a house right now? Is it a good time to buy a house? Obviously, everything is going to be in your market. It's more of a specific, let's take a look at your specific situation. Let's take a look at your specific market and figure out if it's a good, smart move to do so. And then also selling. Really, at this point, it's hard to predict where it's going to go, but I can tell you that we don't usually see 30 or 50% year over year growth every single year. So I don't think that we're going to see the type of growth that we had last year, because we already have the foundation, and where it's starting is already different than last year, right? Last year and the year before, rates were coming down. Now we hit that bottom and we're starting to come back up. So I'd say, of course, if you had a desire to sell, it's definitely a good time. But yeah, you make your own decision. Give me a call, bounce ideas off me, and I'll be happy to help. Talk to you soon, guys. Bye.